Oh man, so Bitcoin is dumping as we speak. Crazy here. 19,000, just $50 away from 19,000 on the Bitcoin chart. We're going to watch it together. We're going to try to understand what is going on, and it's literally dumping as we speak. So if you've joined me here on this live stream, don't forget to smash the like button on your way in. And we're going to spend some time looking at this crazy Bitcoin chart. I was sitting here minding my own business, having a nice London evening, and you could see Bitcoin just decided on this big 1 minute candle here to send us to the downside. It was here 18:05 my time, big candlestick to the downside, and I jumped as quickly as I could onto a live stream to make sure you guys know exactly what's going on. So let's dive into that together. As you can see, we were just chilling here, right, as we have been for many days around this 19,000 to 20,000 level. Didn't look like it was a big deal, and boom, big fall, $1,000 almost done on the Bitcoin price in a matter of minutes. And reality is, majority of that was on this one big minute candle, which is why it's so important you guys practice good risk management. Crypto is the most volatile asset class in the world. Now, as we can see, fear and greed index today is sitting at 22. No doubt after this, it's going to be even lower. Do you like my Binance shirt, by the way? You know, Binance. Yep, shout out. I'm not sponsored. I'm just wearing the t-shirt. Now, this is the culprit, guys. For those of you wondering, what is the culprit? It's this, and I'm going to get into it. This is the Fed rate monitor tool, okay? And this is really important because what this has just done is it's spiked up from 61%-ish to 77%. In other words, 77% of the market, a lot more of the market is now pricing in that 75 basis point hike. I updated you guys on the Telegram channel that the ISM manufacturing index came out pretty strong. In other words, the US economy is looking stronger than expected, okay? Good ISM figure. You had a good jobs report last week, and everybody's expecting Jerome Powell to continue to be hawkish this week and continue to be aggressive with these rate hikes at the next FOMC meeting, which is just 2 weeks away. On the 21st of September, you get your next FOMC meeting. Remember, CPI comes out on the 13th of September, so not far indeed until that. So you can see Bitcoin struggling here. No doubt there would have been a bit of manipulation / a big sell order going through this point. We're so early on this news. I mean, it's just been minutes since this happened that we don't know exactly who triggered that. But as you can see, if we just start zooming out now on the longer time frames, you can start to see what's played out, right? You can see I left my price targets in there for you guys. The breakdown, the conservative breakdown brings you down to that 18,800 range, and the longer term breakdown brings you all the way down to test some of those lows at 17,600. I've been warning about this for a long time. Yes, I come across bearish, and that's because quite frankly, I was bearish, right? So we have to regroup now and see, okay, if we head on to the 4 hourly, where can support come in from? As you guys know, I said plenty of times that we get support around the 19,200 level. That's pretty much where we're sitting right now, but I don't expect that to hold. The bigger support is going to come from the next line at the bottom of the channel at 18,700 range, okay? That comes in through this pivot point, and it's the channel which we've been in for a while. So that's what I'm looking out for here to the downside. And it's not a great day here on Bitcoin. Let's see if you guys have any questions in the chat. That's the reason we are live. Beyond Infinity says, thank you, we need you. Live streams are cool, appreciate you, buddy. Vishal says, dude, was the volatility this bad the previous bear markets? Anyway, this bear is different. My first crypto bear? No, good question. This bear market's about the same. I think volatility is volatility, and in fact, if anything, volatility kind of gets less the more adoption Bitcoin and crypto gets. But it still is the most crazy. This is nothing. If you think this is crazy volatility in Bitcoin, this is nothing. You've got to be wary. This is a 3% down day today so far. I mean, we've had days where you can fall 10, 15, 20% in a day. You've got to be prepared for this in the crypto space. So this is not absurd in crypto. Yes, that was a crazy minute candle, and this is why it's so important in crypto. You set your limit orders in order to buy the dip because it can happen so quickly, but also you have your stop losses to get you out of any positions which you're not confident in. Guys, don't forget to smash the like button if you appreciate me jumping on as soon as I saw the Bitcoin price dump in. Then let me know that you appreciate that with a smashing of the like button. It helps this stream get out to more people, and I'm happy to take your questions in the chat as well. Feel free to drop those in, and I'll periodically be looking at your questions in the chat. But in the meantime, we do want to take a look at other things. When I see these kind of things happening, I want to do a quick health scan of the market. So just so you guys know, in case I let you down and I'm not on a live stream in the future, you want to do a health scan. And a quick health scan says, let's go to the US markets, and we can see we're down, okay? We can see the NASDAQ is down 0.8. Not a crazy pivot. So what I'm going to do is I'm going to come over to the actual chart, and let's take a look at the SPY. And we do have a bad candlestick, but it's not as bad as the Bitcoin one, right? Let's just zoom in a little bit more. Yeah, it's a red candlestick, but it's not insane, right? The S&P is 0.5% down. Let's look at the Nasdaq to see if that's any worse. Yeah, it's had 2 red hourly candles in a row, but still nothing like what we've just seen here on Bitcoin. It doesn't seem to be an equity market issue so far. I could be wrong, but so far from the data I'm seeing, it doesn't seem to be that. So it looks like we've got a bit of pain in the market due to this going on, but there seems to be something else going on with Bitcoin. Maybe a big account offloading. If you guys have any data, I've not got Twitter up right now, but if you guys have that data available, then do let me know, okay? Okay, so now the next thing we want to be looking at is, let's take a look at the news. Let's give it a quick refresh to see if there's anything here. And no, nothing here yet. No surprise, these guys take forever to put stuff up. And then you want to do a quick check of the dollar index, okay? So you go ahead, you look for the Dixie and take a look at the Dixie. Yep, as expected, continued strength here from the Dixie. Not a crazy hourly candlestick. So it suffices to say that this was quite a Bitcoin-specific event here. Maybe a big whale offloading, which we'll find out shortly after. Charles says, no, I meant the movement either way is too low. Should be higher and wider both ways. That's how we trade. Traders make money. Yes, sorry. Oh, yeah, you're saying it's not volatile. Yeah, it's not volatile. And that's just been how it has been over the last couple of weeks. I mean, if we show you here the daily chart on Bitcoin, we've just been glued to this 20,000 level. It's been really, really boring. And it's not normally like this. This is just a boring, boring bear market. Okay, so this is bear markets can, sorry, to answer your question, bear markets can be this dull once you get to the bottom. Okay, now on your way down, you can continue to have the volatility, but once you're there, it's like just a dead fish. It can be really boring. A lot of people are not interested in crypto. You can look at the on-chain metrics and see, you know, the number of active addresses start falling. You see the activity on-chain. People aren't using dApps anymore, and you do get that level of fall. So, guys, as you can see, we've been monitoring the technical analysis on this for a while, and we hate to say we're right, but we called this breakdown here. We saw the continuation pattern. We called this breakdown. We saw the symmetrical triangle. We've called this breakdown, and you've met your price targets perfectly. So, guys, if you appreciate that, smash up the likes. If you guys have been avoided, if you guys taken any shorts there, then congratulations to you. If you guys otherwise just avoided getting more pain, then congratulations to you guys as well. What did I say? The lower we get to the bottom of this channel, I will be setting my limit order. So I didn't FOMO in. I didn't chase all the way up here at 25. I was patient. I waited for the check back in, and that is how you you add to your spot positions patiently. And if you guys want to do that, check out links to BYBIT and BitGet. Those are the platforms I use, and they're offering some great bonuses. Gareth, I just dumped my lunch money into the market. Probably the reason for the dump. I bet you did. You got that heavy lunch money, man. Victor, hey Ijaz, just as predicted. Good one. Absolutely. And good. Look, sometimes technical analysis works, sometimes it doesn't. But what made this so kind of obvious is when Jerome Powell came out with his hands around the throat of the market, right? He basically said to the market, you're going to stay there. Now, obviously, we've got something that's going on, which is causing a bigger dump here. But either way, this was to be expected to get this kind of a move to the downside. Let's just see if I can see anything else trending here that could be causing it. But otherwise, these are normal things. This could just be, you know, whales kind of selling, a bunch of liquidations on the back of it as well. The liquidation numbers won't be updated just yet, but no doubt we'll see that in the next hour or so. Ijaz, what's your opinion on Flux? Not got a huge opinion on it. Yeah, like you said, some people are betting on it as a opposition for the miners to move across to an ETH. I think we're going to have to wait and see. Remember when Luna collapsed and a lot of people said, oh, the traffic from Luna is going to go here, it's going to go here. It's very difficult to tell when you see different platforms picking that up. So until we see the miners actually move across and actually try being in different areas, only then can we get conviction that this is where the miners are going and play that bet, right? So we need to see that play out. It wouldn't be something I'd be aping into right now. So looking at this on the 4 hourly, big dump to the downside, guys, meeting our price targets here to the downside. So we've officially met that one. You can see here, I've still got the price target here to come down to 18,000 range, 18,800 range at the bottom of the channel. And then even longer term, if we lose that bottom of the channel, guys, you know, I hate to say it and I hate to be the bearer of bad news, but we could be getting that 17,600, which will be a nice opportunity for me to be doing some even cheaper buying if we get that next leg. Now, of course, you know, we've got this could consolidate for a bit. It could pump back up before then seeing your next wave to the downside. So be patient. Let's see what happens. Because this has fallen so fast, don't be surprised to see if people are buying the dip right now as they hear the news, right? So we'll keep an eye on the shorter time frames as well, just to see if we see any of that buy the dip momentum. Because as we're seeing here on the 5-minute charts, look at this. It's been pain after pain, right? So a couple of candles here trying to buy the dip and then more pain coming through. So we need to keep an eye on this and we'll keep that open here. Victor says, is it a possible bear trap? Not particularly. I don't think so. I can't think of a situation where it's a bear trap. I mean, for it to be a bear trap, the macro conditions would have to be in our favor, right? But at the moment, they're not. They're in the favor to the downside. So you've got to give the benefit of the doubt to the motion you're moving in. Like I said, even when we had this consolidation, you're doing it into your EMA ribbon. So if I bring up the EMA ribbon just to show you guys here on the daily, what were we doing? We were just moving towards EMA ribbon. We didn't even touch it. And same again here. We just move sideways, boring, and then the bears take control again. So at the moment, there are no balls in the conversation, to be completely frank, right? There's no balls in the conversation. If you had balls in the conversation, you'd at least do that, then come down, then at least do that. If you had that same trend, if we saw something like that, then you can say there's some balls in the conversation. But the fact that it's just doing this, it's like hanging and then falls and hangs and falls. It's just the bears taking a break. They're just chilling. It's like a boxer taking a round off, right? Just chilling, walking around the ring. They're not getting hit at all. Like, for them to be hit, you'd have to at least go test your EMA ribbon. It's not, we're not even throwing jabs here as balls. So, the risk is hugely off right now. And that is why it's no surprise to see dumps like this. There's only so long you can hang around from 20,000. And we said that, right? We said that when we were breaking down. We said very clearly there's going to be psychological support at 20,000, but I don't think it will carry much weight, right? Because it's just a matter of time. It's like tug of war, but you know you're going to win. It's just inch by inch you're winning, and eventually the bears just took 20,000, right? It's like candy from a baby, ultimately. So that's why we're seeing a big fall here now. I mean, once you clear that 20,000 level, if you bring the VPVR, volumes become extremely thinly traded, okay? So yeah, let's use that analogy again of tug of war. You're playing tug of war, you're pulling inch by inch by inch, and you're winning, right? You're winning slowly. And that's what the bears were doing over the last few days. It didn't look like it, but they knew they were winning inch by inch, and the momentum was with them. Then what happens? It becomes easier and easier, and then eventually the person on the other side trips over, and then the whole route moves really quickly. It's that inertia, right? It's that movement, right? So that's exactly what we've seen here as well. Now we're going into thinly traded areas. Look at the VPVR. Let me just pop my head out the way for you guys. Look at that VPVR, right? It becomes very thinly traded. And this makes it easier for the bears to push us down here. We're now below the point of control. This is not great here for Bitcoin. And it's something we predicted, and you can see that playing out now. Similarly, look at the Bollinger Band. We spoke about this Bollinger Band having an impact, and you can see we're doing that exactly. If we head on over to the hourly chart here, you can see us breaking out of our hourly Bollinger Band, showing that this is huge volatility. Similarly, if I show you the 4-hourly chart, breaking down from our 4-hourly Bollinger Band as well. So this was coming because we saw that we got this constriction in the Bollinger Band. I spoke about this yesterday with you guys. When the Bollinger Band starts to constrict, that is a little bit of a problem, right? That means you're going to get a big volatile move coming up. It's like pent up. It's like a coiled up spring. Once that's done, big move to the downside, big move to the downside. And these are the signs you'll start to pick up the more technical analysis you do and the more time you spend looking at the charts. And again, guys, if you want to take advantage of my free technical analysis course, it is free, right? I don't make a penny out of it. Go check it out. Links in the description. I put it up on Skillshare. I'm not charging you $1,000 for it like other influencers would. I was going to. Not because I wanted the money, but because I wanted you guys to take responsibility to learn it. And it's just a reality. And now, because it's free, there are many of you who are procrastinating and not using it. I actually tweeted about procrastination today. So if you're not following me on Twitter, at @RealJaz1, get that checked out. Yes, it says like your t-shirt. Yep, Binance CZ sponsor me. Lefty, I just hopped on. What happened? Big dump to the downside, Lefty. Yep, all the alerts are now going off after us. We're ahead of the alerts today. Mark, NASDAQ down 7 days in a row today. First time that this has happened in years. That's what is dropping BTC. It's one of the factors, right? 7 days in a row on the NASDAQ is not great at all. But, the fact of the matter is, it comes down to the macroeconomic conditions. It comes down to the macroeconomic conditions in that, right now, Jerome Powell has told us be extremely risk off, okay? And that's all it is. He's told us to be risk off. He says, I'm going to continue doing what I need to be doing. And that is why the markets calmed down. The brief rally we had is because they misinterpreted Jerome Powell for being dovish. And Jerome Powell, it was his fault. He came out dovish. Now he's come back and put them back in their box, and now you're back at those levels, back in the July levels before that pump to the upside. Okay, so don't be surprised to see that, and don't even be surprised to see Nasdaq come back down to these levels, right, at 280. There's no, it couldn't come back to 280 because that was the level you had in July. Even going back to the 1st of July, you're coming down to the 278 level. If you wanted to fall down to the mid-June levels, you're looking at 271, right? So there's still room for the Nasdaq to continue to fall here, and a bad CPI reading or not so positive CPI reading, and this will tank next week, right? So we need to watch out for this, and obviously it's going to take Bitcoin with it to the downside. So great opportunity for us to dollar cost average in. I think the breaking of this 20,000 level mark is particularly significant Because I think not only does it mean, okay, we're through that level, but I can't see any clear support now until 18,700. So not only do I think we've now got a good opportunity to be buying now, but I think it'll be a matter of time before we're testing that 19,000 level and trying to break into the 18s. When we break into the 18s, things will get super nervy because you break this pattern to the downside and you're testing your lows. And that, trust me, the fear ingredient index will start notching down. This will start going back below 20, 18, 17, 16. Markets will get very fearful. There will be other companies who are out there facing liquidity issues. And again, not to bring the fun back in, but this is what happens when Bitcoin spends so much time with depressed prices. Companies do struggle, projects struggle, they don't have enough runway, and don't be surprised to see more Celsius, Voyager type issues, right? There's a big difference for companies when Bitcoin is at 17,600 versus 25,000. That's a huge difference for them and their balance sheets and their liquidity. Okay, so this causes problems. So don't expect this to not be an issue, and we're back into these territories. Now, the positive news is if we can go and create a higher low, right? So longer term, if we're looking at this and saying, how do we get out of this mess? We've just got to not go to 17,600, right? Even if we turn around just before it, as in just up to like here, and we go create a higher high above 25,000 on the next swing over the next kind of few weeks here, then that's a good news, right? Because then you can zoom out and be like, okay, we managed to get out of here. And then on the weekly chart, you're like, okay, we fell, we went up, we fell, we created a higher low, we trended our way, and we start doing this motion to get back out of this situation. Okay, what we do not want to see is us go down to 17,600 and really start pushing even lower than that, creating a new low. That would be extremely painful for me. Hidden Himalayas, like the stream. Yes, that's, please guys, please do smash the likes. There's a lot of you in here. Please do smash up the like button. There's 84 of you guys in here, and there's only 35 likes, which includes the people who have jumped off. So guys, please do smash up the likes. It really does help more people see this stream and helps me be able to jump on to share these insights with you. How low do you think it can go? I think we just covered that off. We are in a crazy week, and Jerome Powell's not even spoken yet, guys, and that's the worrying thing. But it's a crazy month. I expect a lot of volatility this month. You've obviously got Jerome Powell speaking. You've got Jerome Powell speaking now. Next week, you've got CPI. The week after that, you've got the FOMC meeting, right? Expecting another rate hike. Not to forget ETH 2.0. Not to forget Vassal Hardfall. What a crazy month we have here in September. Barney, good to see you, mate. Hope you're doing well, buddy. Yeah, says everyone hit the like button. Absolutely. Let's take a look at Phantom. I mean, obviously, the wider market is falling in solidarity and empathy, right? So you're seeing Phantom now falling in its descending wedge. Let's take a look at it from this perspective. Let me just clean that up for you guys. You see, we're just getting thrown to the downside. So no surprise here on Phantom. Everything's falling right now. Down 6% Phantom. Solana down 2%. You've got BNB down 3.6%. Ethereum even down, which was the only coin managing to hold in the green the other day. Matic down 4%. 6% for Cosmos Atom. Cardano down 5.6%. A really painful red day, and obviously that's going to happen when you see Bitcoin. 1 minute you look away from the computer and Bitcoin is now down at 19,000. So with Phantom, like I said, guys, I was expecting that dump on Bitcoin. I made clear my latest Phantom videos. I'm expecting support around this yellow line here. That's at 24 cents. But if Bitcoin wants to start breaking 18,800 on the bottom of that channel, then do not be surprised to see us go try test 20 cents again. That's our pit stop there on Phantom. So those are the levels I'm looking out for. Longer term, if we need to go test another level, then you've got 15 cents there, which dates all the way back to when we were monitoring it in the cup and handle pattern over here. Okay, guys, so that's something for us to watch out for here on Phantom. Again, if I didn't have enough Phantom, these are the kind of areas as we get closer to 24 cents that I would be comfortable dollar cost averaging a bit more. I would not have been chasing it here at 41 cents. And the closer we get to kind of 20 cents around the bottom of this wedge here, the more significant my nibbles would be if I needed more in my portfolio. Robert says, keep up the live stream, like the solid TA. Appreciate you, buddy. That's really nice of you. John Lewis, do you think ETH will drop post-merge? And so many different eventualities with the ETH merge, right? So, look, at the end of the day, what you'll realize is most traders and most speculators will not try to trade the actual outcome of the event. They trade the lead up to it. And this is what I was trying to explain to everyone. Whether it's ETH 2.0, whether it's Luna Classic with whether the burn proposal is going to go through, whether it's Vassal Hardfall, the traders and the speculators trade the lead up, not the outcome. The outcome can have so many different variables, right? So Ethereum, the merge can go successful and everybody could be super happy. And then the next day there could be a bug. It could be very anticlimactic. Everything can go smooth and the market is like, boring, right? So many different things can happen, which is why it's you're better off being reactionary and waiting to see what happens and reacting and having a game plan either way. So set yourself a couple of parameters and say, if it goes well, this is what I'm going to do. If it goes poorly, this is my backup plan, and then execute it based on there. The reality is, I'm not a developer on the Ethereum team, so I cannot tell you whether the merge is going to go successfully or what's going to happen. What I can tell you is what happens in previous hard forks. And for example of what has happened in the history, go watch my Cardano video from earlier, because I broke down the last 3 hard forks and what the price action did up and after that hard fork as well. So go check that. They're the best examples we could pretty much have. Lefty wants a level on Algorand. Let's take a look at Algorand. So Algorand's in some pain, man. So Algorand's gone and posted a new low, right? So as in it's not used. We have initially had our 0 line here on our Fibonacci. This will now have to drop down to the levels we're sitting at now. What I'm looking at for Algorand is it's got to hold this level, right? This is, oh man, does not look great here for Algo. So you can see this level here where you've got a little bit of horizontal support at 28 cents. It's got to hold that level for me. I mean, it's looking ugly if it's not got much room, right? So if Bitcoin does go to 18,800, tries to go towards 17,600, Algorand's going to really bleed here, and I think you can start getting some painful lows, maybe even coming down to support. You know, support's there at 21 cents, right? You're looking at there. Yeah, that's what I'd be looking out for in terms of major support. You've got a bit of minor support, 27, 28, but that's where we're at now. Guys have any other questions? What's my worst case for Ethereum? I mean, worst case is catastrophic, right? So that's what's scary about this. This is the biggest day in Ethereum's history, and arguably in the history of smart contract platforms. I mean, you know, you can see here ETH was still setting up for a nice trade. Obviously, Bitcoin's ruined its day today. It was running nice and high up there, and I'm looking for a potential trade up to this level. I shared that trade with you guys yesterday as a potential nice long trade on Ethereum. Of course, anything with Ethereum, you have to take it with a pinch of salt, because as we've seen today, the wider market can dump you back into your pattern. But generally, Ethereum versus Bitcoin, I think Ethereum will hugely outperform Bitcoin leading up to the merge. The question is, what happens after the merge? And that's where traders have to be smart. If you're looking to trade or speculate it, you've got to get in and you've got to get out. If you're looking to accumulate ETH for a long-term hold, I still think these are sensible levels. I don't think these are crazy levels to be accumulating at. I think in the long run, you'll look back and say, yeah, these were decent buys around the 1,500 mark. But at the same time, if Bitcoin wants to really crash and the merge doesn't go well, I wouldn't be surprised to see us come back into the channel, and the channel starts at 1274. And that's what we need to keep an eye out. Now, obviously, the merge not going well has so many different implications, right? It can not going well is a bunch of people seeing a bug and then tweeting on Twitter that, oh, Ethereum's a fail. But in the great scheme of things, they're going to forget about it after a couple of days. So a real catastrophic fail, which could wipe Ethereum out, that would not be great at all, or hack or something like that. But most likely, it'll go smoothly. They've done 3 test rehearsals already. They go again with the live. Maybe there's some teething problems, some bugs, maybe some other layer 1 solutions put some negative news out about it just to kind of stub their momentum, and they'll navigate it, right? They'll navigate it, they'll get through it. So in terms of a long-term hold, I mean, Ethereum's sitting at great prices right now, but it's easy to kind of just have downside bias and be like, yeah, I want to buy it cheaper, but at the end of the day, you've got to get your positions in the market. Yes, have I ever looked into QNT? No, not a big fan of spending time into QNT. That may change, however. Yep, they do want you to sell. That's what the markets do. They want you to sell. Now, let's click on the 5-minute chart here. And as you can see, we're starting to put a plaster on it now. We're starting to see some support around 19,000. But again, this is normal, right? You've just fallen here from 19,700, 19,800 range here, all the way down to 19,000 flat. 19,000 flat is going to give you some psychological support, right? But don't be surprised to see if we spend a little bit of time here, maybe even as I jump off the stream, we spend a little bit of time here, maybe it tries to go up a little bit, and then we just get thrown back to the downside for our next leg down. And the next leg down is where things get interesting, because then you end up right there at the bottom of the channel where I scribbled, okay? When you get there, that's when things get really, really nervy. Because if we break this channel to the downside, then in sight is 17,700 on Bitcoin. Let's get a quick refresh of the Fed rate monitor tool. Remember, the ISM figures came in positive, the jobs figures came in positive, which is reminding the markets that the economy is healthy. That means it's not good news. I know it sounds odd, but that's not good news because that means Jerome Powell can come out with more aggressive rate hikes. So that's the topsy-turvy market we're in right now. Let's, for the sake of it, take a look at Lunar Classic as well for you guys interested in Lunar Classic. And you can see this calling off, obviously, with the wider market. But that's pretty good. That's still a bull flag, right? You had a big move to the upside. You get yourself a bit of consolidation ready for your next move to the upside. But in order to do that, we'll need that momentum and the volume to come back in for the next push to the upside. You saw that here, right? You got a consolidation, it chilled for a bit, and then went for the next move. Don't be surprised to see similar pattern play out here on Lunar Classic. So there you have it, guys. An evening dump here on Bitcoin. And that's what's, that's a good reminder for all of us that you've got to follow the data. You've got to let the data lead you. And you can't let influencers who are telling you that Bitcoin's going to go back up to 45,000 affect your emotions and, more importantly, your investments. They're your investments. You've got to take responsibility. You've got to do the research and let the data lead you. Not a person, not your emotions, data. As you can see, everything was stacking up, whether it was on-chain metrics, which I was harping on about all last week, whether it was the technical analysis, whether it was the macros, any way you looked, I couldn't see positivity. And I know it's boring to come on these live streams or these videos every single day to give you negativity, but sometimes that helps you prepare to stop you from FOMOing in and be patient for a little bit more of a pullback to get that extra cheap Bitcoin. Hope you guys enjoyed this live stream. Don't forget to smash the like button and subscribe. If you appreciate this type of content, then hit up the button, the like button, and make sure you go watch this video here